Hello and welcome to today's video on high altitude investing. Today is going to be a quick video and it's on why you should use stop limit orders and what are the pros and cons to using that. So today's going to be a little bit faster. Kind of had some stuff I had to help my dad with today, so it's it's gonna basically going to be a little bit of a quicker video. Didn't have as much preparation time, but tomorrow I'll have a full video ready. So, well, first of all, what is a stop limit order? Well, a stop limit order is, let's say that I buy in to LISC right here at 0.0001 Bitcoin, and I'm like, okay, you know, if it goes up, then I'll be good, but I don't want it to lose too much profit if I'm wrong. Say it, you know, if I think this is going to go up right here and I get in right here. And then I'm like, well, you know, it could go down a little bit, so I set a stop limit order for right here. Okay? So what that would do is if the price does go down to here and it does in fact touch my stop, then it will pull me out of the trade and minimize my loss because, you know, it kept going down. So if you're not right on the trade, if you know you think it's going to go up and then it doesn't, you can at least get cut off before you go down clear to here, right? Now, something that I like to do is, let's say I'm trading LISC and I'm getting ready to buy in, okay? So I'm getting ready to buy in and I'm like, ooh, this is a pretty good buy signal, you know. So I get into the market right here, okay, at 0.000866, and I'm just waiting, and I set my stop loss down here at the lowest point I can see. Let's see here. Set my stop loss right here. And then the market's just trading along, you know. If this was a live market, pretend this was a live market. So candlesticks are just going along, candlesticks are just going along. Here's my entry price, and here's my stop loss. So if it goes down to there, it will take me out and cut my losses off. And I'm like, ooh, you know, it just went up to a new range. So I bring my stop loss up to here, okay. So this is still my stop. Here's my entry point. Now, what that does is that means that I have a little bit higher stop loss, okay? So that's taking less of my loss that I was going to have. That brings it up, and I'm like, ooh, it kind of seems like it's finding support again right here. So I put a stop loss in right here, and the market, you know, goes and goes and goes and goes and goes and goes. And then it goes up to here, and I'm like, ooh, it looks like I have a new stop point. So I put my stop loss right here. Now notice, now my stop loss is above my entry point. So that means no matter what happens after this point in my trade, I will be in profit. So if the market comes down to this stop again, then I will be in profit even if it goes below that level. But the market didn't, well, I guess in this case it would have went below that level because of this candle wick right here, but I still would have closed out at profit. Now what an optimal market is, it wouldn't do that, and you could set another stop loss up a little bit higher. So you could set your stop loss right here, and you know, if this wick didn't come down like this, then you would still be in on this position clear up to here, and then you could bring your stop loss up to here. And the point of this is locking in profits as the coin goes up. So once you're in profits, it's an asset trade, and the goal is to just lock in profits as you go up. Now some cons to this are if you don't set your stop at a point that you're comfortable with, and let's say, you know, you set your stop like right here, okay, and the market, you bought in right here and you set your stop right here, and the market goes down and closes out, you just lost. So you really want to make sure that you have a good trade set up. You want to make sure it looks like a nice buy signal to do this method. But basically the point of it is to just bring up your stop losses as it goes up in value, so that you can lock in profits from your entry position. So if your entry position is right here, here's your first stop loss, you know, say it just doesn't quite hit it, and then it goes up here, and then you can set your stop loss here, and then you would be in profit. Then it goes up here, you can set your stop loss here, and so you're just locking in profits on your way up. So that's why people use stop losses. I have a video called how to make a stop and limit order if you want to learn how to set stop losses on Poloniex, the trading platform. But this is basically how I do it, and it seems to work really well for me. If I find a good trade that I entered on, and I can just bring up my stop and lock in profits, that way I don't have to be worried about whether it just dumps off randomly. And then I can day trade it. I'm not too invested in the idea of the coin. So even if it keeps going down, you know, if you're invested in the idea of a coin and it just continues to go down and down, you're just like, oh, I still love this, I still love this. Everything starts to look like a bottom formation. Everything starts to look like the market is going to reverse if you're invested in the idea of the coin. What you really want to do is find good buy setups, and when you can find a good 1, 2, 3 bottom buy setup and get into the market, and you set your stop losses, then even if it does go down and you know you're invested in the idea of the coin but it still goes down, at least you didn't lose that much money. So that's the idea behind it. That's why people use stop losses. I personally use stop limit orders all the time in my trading, and I hope that helped you better understand it. You guys can go to my website if you like. You can donate in Bitcoin. I also have a Discord chat, so, you know, all those different things. Hit me up on Twitter if you'd like, at HighAltitudeINV. And yeah, so that's today's video. I appreciate your time. Thank you guys for watching. And as always, stay profitable.